You sound so glum.
Me?
Jen,
I
it's
don't do
Christmas
glum.
everywhere except her heart. Nah, who does glum? It's the holidays.
Oh man.
Yeah, see that? Even oh man sounded glum.
Oh my god, I'm not glum.
Okay.
It's
That's
still early in
fine.
New York. It's still
I
early
had a
in
kid
New York.
homesick from school for 3 days.
You're the California contingent, so
Yeah, we're
Yep.
peppy. We're rocking. We're going.
We start early and finish early. That's how
Like
we roll.
14 degrees here. It's very cold.
14. Wow. All right.
balmy.
That is
balmy.
just a lot of misery.
It's been pretty.
The
you
wife
think
wants me
that's-
to do fast again, and it's
Oh, it
just
warms
like,
up. I'm sorry. It
yeah.
feels like 21 degrees. You know?
Oh, it feels
21.
like 21.
So you got a little wind
Feels
chill
like
this
just
morning.
seems like absolute pure bullshit. That seems like it feels like.
You're not buying that.
If you get any thoughts
No.
on lazy,
On which?
what?
any thoughts on Lazy
Wait.
Boy? It's the top of my performance list here today.
Really? I didn't even. Did they report last night, or did they just?
I
kind of
don't
part
know.
of
That's
the-
why I'm asking my restoration hardware expert. So I'm gleaning.
Yeah. I didn't even
off
listen
of,
to
Lazy-
restoration hardware.
reflected
last
Does
line-
night.
Lazy Boy have Do they have restaurants in Lazy Boy now? And yachts?
I think they just merged with Cracker Barrel.
Oh, that's right.
That's
Cracker
not a bad idea now that I say it.
Barrel, right? They need to have TVs, beer, and
Sedentary people.
sports going for inside of Lazy Boys, and that might
I'm getting misty eyed just thinking about it.
right.
Boy, they had a huge month.
Sure did. Look at that. All right, let's.
Is there
Yeah,
a
that's
new
a-
Lulu person in? Jeff, is there a new Lulu person mentioned?
There's not a new person, but they fired the old person. So
I know that. Okay, I didn't know there's a meet the new boss, same as the old boss, that kind of thing.
oh no, there is decidedly going to be a different type of boss. There's significant disgruntledness on the board. They're not pleased. I don't really think it was Calvin's fault, but we'll see.
I think he kind of walked into a wood chipper and just couldn't get out of it.
All right, let's get this show on the road.
Bingo.
Welcome to Wall Street Beats, everybody. I'm Steve Lamar, joined by our technicals and momentum pro Kevin Bakes Baker and our retail pro Jeff Mackey. We're going to talk. What are we talking today? Lulu, I'll bet. Nike, probably.
Sure.
Maybe some RH, and what Costco announced last night. We didn't get a $15 extra dividend this year, so no stocking stuffer for you Costco owners. But the numbers look pretty good. Jeff, what do you think? What'd you think? Did you look at the Costco numbers? Do you care?
I did. Yeah, I'm long. I'm trapped long. I'm fine being trapped long. Costco flew a little too close to the sun as a discounter. They became kind of a cultural thing about 6 months ago. That, as usually happens with your discounters, is about where the stock topped out because, where are you going to go? At the end of the day, you're selling ramen noodles on pallets. So it's kind of the same as it's ever been. I mean, it's the same company they've always been. It's incredible. The valuations just don't get you long. And so you have a real disconnect there without the narrative advantage that you have at Walmart, where they're doing a lot of exciting things, and e-commerce at Walmart's now going to be $100 billion business at least next year. It's going to be bigger than Target just by itself. They're making money on it. They're selling ads. Costco, kind of a similar super low margin in the stores, got a few other kickers. They've got the membership going on. They didn't do anything wrong. They just have a new CEO, and there's less compelling reasons to kind of buy it here. And so we've just had a drift lower. Been a lost year a little bit for Costco as a stock, and Amazon as well, for that matter. Two wildly different companies, but both largely tariff proof. I put them in a tariff proof basket at the beginning of this year, and Walmart's clearly just outperformed Tearproof in the sense that they can pass it on as more easily than most other chains, and are selling kind of similar goods, which is to say just about everything. The real story last night was Lulu and the turnaround idea there, which was they guided down again for Q4. The stores have just been terrible, but sometimes you just get these stocks that are sold out. A lot of people betting on another 20% decline. Lulu had gap down 2 quarters in a row, and that is kind of a sucker's play to think that you're gonna get three. I mean, it's the numbers might have justified it, but a change at the top, it's perceived as needed. No one expected a lot of great things. I have a little bit of a kind of a bearish position. It's um, you know got a little spread going on, but it's. I don't think there's any huge great shakes there. The 12% today is a nice offer. You're going to run into some resistance around 200. It could run, but the real story for Christmas has been the retailers have been on fire. This has been a great month, and it's almost just seems ludicrous to bet on the consumer every year. I came in a month ago and told you and everyone else, this is going to be the biggest Christmas ever, and I didn't care what the survey said because, gloom clicks. And so all the surveys were, geez, Gen Z doesn't spend the way we need them to spend. And this is going to be a bleak Christmas. Super easy to call bullshit on that. It's an amazing trade in that it works kind of every year where you just sort of find the hot retailers. The industry is kind of a zero sum game. You just got to figure out which retailers are selling stuff right now. American Eagle had an incredible quarter. Gap had an incredible quarter. And, the good retailers are pretty much openly just mocking the idea that Gen Z doesn't spend. Victoria's Secret, their comment was Gen Z's coming into our stores with pictures on their phones showing us exactly what they want to buy. Are they shopping different than their parents? Well, yeah, because their parents didn't have phones to bring in. But in terms of lining up, just like their Gen X aunties, Gen Z's coming in and shopping for the exact same stuff at the exact same store.
Right.
You always have to find the better players and the better executors, and they tend to be sort of in all but the worst economies really immune to what the various kind of trend du jour is. We've seen great traffic at the stores, which is kind of amazing. Online has been incredible. AI has been a real thing this year, so to have traffic up at the stores at all tells you the cultural import of just shopping as an experience in this country. We like Christmas, kind of leave
Yeah.
it at that.
And I haven't been in a Victoria's Secret in 30 years, but I would imagine it's easier to buy underwear there than in the back corner of a Macy's or a Nordstrom's, or I mean, I could just finding it probably isn't easy. So you need that kind of thing, right where to go, and it's right there, right in your face, right?
It was one of those. It's a lot of what I do is a lot of vibe checking, and it is rightfully mocked. I mean, too many people who do this kind of on an amateur basis go to one store and draw conclusions and start investing. I get stories from all just across the country, and my buddy Lance is sending me video footage of parking lots in Scottsdale telling me how crowded it is. I have people in Westchester telling me how crowded it is. You get 20 or 30 videos and pictures of just how jam packed your store
Right.
is, and after a while you say this is kind of becoming statistically significant. The consumer's fine. It shouldn't be the kind of bet that you can make a dump truck full of money, but you know what? It has been. Things like the denim trend,
So
super
what would
real.
you rather?
That's a real thing, and we've been buying on it.
You've been on denim for a year. You've been dead right on
That's
denim.
kind of the wonky crap I do, Bakes. Where I mean, you take the denim grows with GDP, right? It's a commodity, 180-year-old product. There's literally nothing new going on there. But when you see that demand spike up from 2% to 5%, somebody's going to have a much better quarter than expected. And that somebody turned out to be the Gap. American Eagle, Levi's is doing okay, but actually not that great. But if denim is as hot as it has been, at American Eagle, they said that their top 5 styles in denim, the demand was up 50%. if that's the case and you have that kind of traffic coming into your store looking for product, you're going to be able to convert that into underwear. You're going to be able to convert it into all kinds of different styles. For all the hype about the Sydney Sweeney stuff, which just seems
Didn't hurt.
endless. Are we this obsessed as a nation with boobs, though? I mean, but seriously, it's they still are running stories on it. The truth is, they were sold out of the Sydney Sweeney stuff by September. Just sold out. They had absolutely nothing else to sell there, and so people just can't shut up about it because she looks great in photo spreads and shows up
In
half
denim.
naked a lot. Yeah, it's speaking of clickable, she's endlessly clickable, so to speak. And I mean, nothing vulgar by clickable. I mean, just people looking at the articles. But it got people talking. It made them culturally relevant, and that's how you play these mall stores. Is when people are talking about them, you want to own them. Lululemon, to bring this full circle, 4 or 5 years ago, everyone was in Lululemon. It was absolutely ubiquitous, and they completely
Huge.
owned an entire product category unto themselves. They aren't
Yep.
very fresh right now. Their stores need a refresh in a bad way. That's why you're seeing that stock behave well today. But the quarter itself was not great. The RH quarter, Gary did his thing. I didn't listen to the quarter because I didn't have 90 minutes to just sit around and drop acid and chill with Gary. But it
Chill,
was
Gary.
the highlights were kind of what the highlights are with RH, which is, this is the worst economy in the history of the planet. Kind of being pissy about Laura Albert at Williams Sonoma and how they're not the same, and RH is going to be a gazillion-dollar luxury brand. If they just triple down on that bet over and over again, it's a thing unto itself. Of the stocks, I would think Lulu would have a more sustainable chance to kind of make some progress, just as we see if they're able to freshen up that merchandise. I still don't know what RH does for a living, but overall, Christmas was pretty good. I think you still have, a few weeks left on that trade, because you're going to see those Christmas results come in, and they're going to be stronger than people expect. Still, the persistence of the no one shopping type of that is just bizarre to me. Gallup came out with a poll last week saying that demand is going to be down 20% over year. At this point, folks would have to return stuff to get us down 20%. That's just insanity. We've already shopped too much for us to be down 20% just after Black Friday. It's kind of craziness, but I'll take that bet all the time. You can buy dips in most of these names. And Bakes, I think you back it up on the chart. You look at it, it's AEO's making new highs yesterday. So that's great. Martha Stewart's their spokeswoman now. No one's hyping Martha Stewart cleavage shots, but hey, you know what? They're still selling jeans. It's beautiful. I like the chart. I still like the name.
Who is
Bakes, what do
the
you-
Sydney Sweeney that will resurrect Lulu?
What's that? They need to get their
I'm trying to complete curveball. Who is the Sydney Sweeney that could resurrect Lulu?
I can't think of someone that iconic that would be out there right now, but they really need, what they need is a technical product overhang. They need to get out of the athleisure and just becoming synonymous. They've stuck with tights too long. They've stuck with those same kind of ABC pants for way too long. They just need to freshen up, and that's really what cost Calvin his job was they didn't have any alacrity getting new product in the stores. They pointed last quarter to saying that spring to 2026 was going to be when they would have a product refresh. That's just too slow. That's just not fast enough. And you're seeing there's just a technical aspect to athletic wear. Americans do work out. We eat quite a bit, but we do exercise. And there you need clothing for that. The style changes subtly, but right now there are a couple private companies that are sort of eating Lulu's lunch a little bit. And again, last night in their conference call, they say that they complained a little about the consumer and saying that they were downshifting, and that's not true. People are going to Vuori, they're going to Aloe. Those are customers that Lulu used to own. They don't own them anymore, and that's what your problem is. And they're not beating them by any magical, they didn't make a better tight. They're not making tights. They're coming up with slightly looser kind of fabrics and fits, coming up with better stuff for men, and that's why Lulu's losing. So you need a product refresh. I think if you look at that stock, what it kind of tells is a lot of people who had a lot of stock options in Lulu have departed for kind of private companies that are doing a little better. That's just how retail works. It's a tough game.
So I read a note about Jeffrey's analyst, I think it's Connick, who's been a big bear on Lulu, saying that you can stop selling the stock now. This is
I
going to turn.
think that's maybe you get. I like to give a good new CEO, if they make the right hire, they'll get a 4-quarter honeymoon. They can't. It's their latest style efforts have been just kind of moving the logo around and writing Lulu in cursive, which is just hilarious to me. I mean, it's my wife and I use cursive as a secret code in our house. My kids went to two of the best
Nobody knows
schools
what
in
that
the
is.
country, and
Right.
people under 30 can't even read it. It's honestly just like it's a secret code. I write naughty notes to my wife. It's like, yeah, it's in cursive. The kids won't be grossed out. Maybe
You can write it anywhere.
So it's when you just need kind of a product. I went into the other day. I should have posted the picture here. They're selling mules for men, just mules, like the shoe. I is that gonna turn them around? Why are you making shoes in the first place? How does this fit in with my athletic lifestyle? And
Yeah.
you got to move the needle. Make me different pants, because the stores look exactly the same as they did 3-4 years ago, and that's a big problem. And the founder, Chip Wilson, is still hanging around. Smart guy, aggressive guy, not the kind of guy to sit around and watch his 6% stake or whatever he owns still get halved without
Evaporate.
doing something
Right.
about it. And so he's exerting some pressure, and he should. And so
Yeah.
I think he's looking for someone to come in there and improve the technical offerings, improve the general styling that they have going on, and just making it different. Now, that's tough to do. They're an $11 billion corporation at this point, so they're going to be stuck between being the Gap and being sort of nichey, and that's going to be a problem for the multiple. But it's one of those companies, like a lot of them are, where 14 times forward earnings isn't cheap. But look at Target right now. Speaking of 14 times earnings, that stock's on fire. That stock it's got bottom written all over it. Now, does that mean there's a fundamental turn coming around right away? Not really. It means there's a new sheriff come to town, and there's a lot of low hanging fruit. You
Hope is
clean
in
up
the
those
air.
stores, unlock. Yeah,
Yeah.
yeah. Hope is in the air, and they get a few quarters to work that out.
So Bakes, show us your thoughts on the Lulu chart. I bet you got that pulled up in Target and.
Yeah, it's funny you say that. Lulu, around 228 or so, not that far away. I didn't hear anything from Jeff that says it gets above this anytime soon. And there's a decade of people that are losing money in this thing. I don't understand how anybody loses a lot of money in the stock market. That's just my opinion. Anything down 15% should be shot. But yes, this is encouraging. And Jeff, is there a CEO name that is being mentioned that would dazzle you, or what would you? What would get it above this two?
That's probably the next catalyst, right?
I think so.
Yeah, and there's not that many celebrity hires out there that would do that. I'm a huge fan of the woman running Williams Sonoma. I'm a huge fan of the woman running Aritzia. I don't want to see her go anywhere.
Okay.
The woman running Aritzia is probably too obscure to really move the needle right away, but she's got her finger on the pulse of what particularly women in her space are shopping for right now. Incredible up and comer, probably early for her. I'm not sure Laura Albert wants to leave Williams Sonoma, but I would I would invest in whatever she's doing just because she's really good. So there are a few names out there, right? But there always are. There's not someone who's just a super shining, enormous star out there. But it's there are people in play. They're going to have to steal someone. It's going to be expensive to do it, and there's also that tension that Chip and the Wilsons, they kind of want someone who's going to be less of a Wall Street creature and more of just a close hound, which is a little bit longer fix, but then again, again, this is a stock that's down 60% from the highs and trading at 14 times next year's earnings. So I think that's probably a pretty good instinct to go away from a Wall Street person. I don't know, you're not going to get a multiple expansion there. No one's really playing it for the value.
So it sounds like a no touch. Just stay away. There's other places to be.
There was a trade going into the earnings yesterday, and it was a small one. It was simply the bet that it's not going to go below 160 no matter what they say. And in the absence of a CEO change, it might have. I mean, it was not a great quarter. It was a beat, and we're going to guide down yet again for Q4 with a lot of kind of mealy mouth excuses about the consumer trading down. That's just not the case. I mean, it's again, I'm not sure what to tell the people who insist that the consumer is not showing up for Christmas, but they are. Macy's beat. I'm long Macy's. I don't buy Macy's just lightly, and they don't beat ever. If it's a bad consumer, Macy's is going to miss by 900 miles just because it's not that great a company. It's just, it's when these things
The
get
stores
cheap
are getting
enough,
a little better.
They're getting a little better. They really are, and that is good enough. The bar's still higher at Lulu though. That's the problem. Is you can't just make the stores a little fresh. They need a lot of freshening up, and that starts with product. And if they're that slow, if it's a 6-month cycle before they can really get in there and change what they're doing, man, that's a long time to wait. They need someone fast. They need someone with a sense of urgency, and that's tough to do.
Yeah. All right, Bakes. What else what other charts you got us?
Just real quick. It's funny you guys were saying this. I got up early and was going through. I was going through all of my charts that we've talked about in the past, and here's Target getting. This is today. I mean, literally intraday. Getting above the 200-day moving average, which is still declining, which is not good. But this is over a year ago. The last time it poked its head up, and when you look at this thing, this is not a chart I would stop on, but this looks like the knife is on the floor. I don't want to pick it up yet, but the bad news I think is baked in. It looks like to me.
It's getting frisky, and I tell you what's going to happen there is they're going to have their investor day. They make the official CEO change in February. They'll have an investor day in March or so. They'll lay out their capital spending plans. They'll take whatever they haven't guided for next year yet, but they'll take a hacksaw to estimates. That'll take the forward multiple is cheap argument out of the equation, but that's fine. It's because it's no one was buying it because it was cheap. What they want is a story there. And again, it's if the new guy Fidelity can come in with a compelling, I understand what Target is, I understand what they should be. There's a lot of room there. They've slowly backed away from a lot of their cultural causes. I'm not a big go woke, go broke kind of guy. I'm a big discount store should welcome every single human. If you respect our store, you're welcome in our store. Yeah, that's liberal enough for me. Everyone literally is welcome. If you don't steal from our store, then come on in and shop here. And it's a safe, friendly, clean place to shop. That's all Target should stand for. Damn it.
Right.
And they're slowly going in that direction. That alone can start you turning around. You combine that with cleaning up. They have already announced that they're going to increase capex by 20%, 25%. They're going from 4 billion to 5 billion. That's a big swing for them. They don't have a ton of cash there. So, it's if they're deploying that cash well, if they're doing it in a coherent manner, again, you got the 4-quarter rule where people will give them a lot of slack. It won't matter what Target earns next summer. It won't matter. It'll be next Christmas before people are actually looking for an earnings improvement out of them. And that gives them a lot of space. If the stock can start getting frisky over 100, that's all of a sudden you got two things going on, right? Bakes, you're getting over some moving averages that mean something, and you're getting over big round numbers, and you've got a little headroom. There's some space there. there's some moves. I'm not sure exactly what the technical resistance is. People who are still long that, if you wrote it down from 250, I'm not sure getting to 120 is going to be like, oh, thank God, I can finally sell. I'm not sure how much resistance that is in a practical way, but we'll see.
Biggs, where does it
What I
start
would
looking interesting to you?
what I would say is that, I mean, the longer price levels are intact, I pay more attention. This is the 2015 peak back here at $85, give or take, and look how it's respected this over this 5 year 4 year slide down to here, and so I take that as sort of moment of truth kind of thing. If it closes below 85, which isn't that far away, I get concerned. And then I think the next time you run into what you're talking about, Jeff, is 130, this level that was set here back at the end of 19, which is pre-COVID, by the way. And maybe COVID was the worst thing that ever happened to him. I don't know. But so you got this channel here, 85 to 130, but we just tickled 85. And it sounds like, if this, I don't know what the CEO's track record, but all you have to do is go to Gemini 3 and say, hey, how do I run a great investor day that gets my stock to the top of the channel? And I think you'd have a pretty good presentation for February, March.
Yep. And in the meantime, you got stuff making all-time highs. It's my TKO, love them. Think there's, still do wrestling and fighting, just punching people in the face, American tradition. It's like gorgeous. I mean, look at that. You're making all-time highs. You got Walmart making all-time highs. You got these glorious uptrends out there existing in the consumer-facing world, where it's a lot less complicated when you have a chart like that. It's just a nice little uptrend. You take a big thick crayon and you say, you know what? As long as it respects this uptrend, I'm cool in the gang riding this. And I feel okay about it.
Yep.
And,
UFC on the
want a
White House
turnaround
lawn
story.
isn't going to suck.
No. And man, they say it, and it's going to create a lot of buzz, a lot of content, a lot of excitement. And, you still have a bidding war. Arms dealers and bidding wars are incredible. Look at Warby Parker. Look at the what they've been adding on just by being a kind of a play on AI on your face. I got long Luxottica because that should have got long some Warby as well, but they're just making glass frames for people who are doing all the hard work on the technical side. I'm not that interested in Meta stock, but I certainly am interested in the guys that are going to make the stuff for Google, for their AI function. I'm not sure Warby Parker is the best play. It's expensive in a zillion different ways, but look at that, getting all frisky, breaking out just on news that they're going to be making the frames for the Google Glass. That's the way I want to play trends, like the AI on your face. I'm wearing again the frames right now, the ones on my face right now. It's going to be a big deal. It will be a big thing to have that kind of technology, if only for the speakers, if only for the ability to kind of answer your text messages with it on your face. I've got the new augmented reality glasses on order on a prescription level. I just ordered them. It's going to be here in February, but I've seen it. It's really cool. It's real-time translation. It's directions as you're walking with just a little screen in your face. It's not obtrusive. The glass frames are only going to get better. They're a little clunky now, so they work for guys with big heads like me and look a little ridiculous on kind of normal sized people. But that, they're going to be a big deal. It's going to be how everyone's mom gets into AI. And, that is another example of a business that is super boring, like denim. The glass frame business is pretty damn boring, but you increase the growth rate from 3% to 8% on something like that, all of a sudden it becomes really sexy. All of a sudden, geez, I'm willing to pay a lot more for that company. So Warby Parker just went from kind of boring, kind of, third place in every market, make generally considered pretty crappy frames, to a much more interesting play with a chart that is clearly overdone in the short term. I mean, holy crap, what a week. But, do you want to buy dips on that? Well, they're going to have a nice little engine working in the background. There's a lot of different ways to play this game, and I kind of like the way the consumer facing ideas work.
Yeah.
Another one,
right.
Victoria's Secret had a huge week. I touch up
Which one?
VSCO, Biggs. Just Victoria's
Sorry, which
Secret,
one?
VSCO.
Oh, I think one chartist mentioned this on the show not too long ago, but I forget his name.
It's beautiful.
I mean,
it's
You
beautiful.
did.
Credits where it's due. It's that you combine some earnings, you find
I mean,
cultural
it's a
relevance,
simple
and
deal.
yeah, we had the talk.
That's
Beautiful
even
increase, beautiful Christmas.
And this is another example. Stocks go up on earnings, good. Stocks don't go up on earnings, bad. And when you gap up on earnings, it's really good. That means
And you stay up, it's even better.
You get some shorts. It's fabulous. It's fabulous.
Yeah, that's good follow through. That's great follow through.
And then again, look at this. And this is 3 years ago, and we're taking that out. That makes that I'm getting misty eyed just thinking about it. I almost want to go down the runway.
Yep. With your big angel wings, it'd be a lovely. You paint quite a picture.
Don't visualize that.
That's
too
a
long.
visual I wouldn't be able to get out of my head, Biggs.
Yeah, thanks. Sorry about. I apologize. I'm not playing fair.
All right, what else you got? What else are we looking
All
at?
right, what I have, and I mentioned this in the chat, is, and I want to get to Charlie's question too. Silver.
You're going to look at silver, yes.
I mean, hi ho, silver away, and this is extended.
Does not stop, does it?
I agree with that. This is SLVR. It's about 18% physical silver, and then the other 82 are the miners. This is the Sprott Silver Miners SLVR. Bought this in September, right around here. I'm estimating. I simple works, and I just kept saying that if you have I don't have the spot silver chart here, but if you have 45 years of price action below a level, 49.50 in this case, rounded up to 50, and it takes that out decisively, you say, okay, it's 45 years under that level. It's only going to be 2 months above that level. That doesn't make any sense. Just logically, human nature, history. And so, I mean, silver was money before gold was money, for God's sake. And it's just time. It's just time. And we could talk about industrial uses and structural deficits and all these kinds of things, but it's just it's time to make it go. So I put it out, I think October 1st, give or take. Spot was 47. I owned obviously it before then. Here I am in September. I'm up 30%. And here's what I'm doing, and this is my rationale. Obviously it's run up a lot. I'm up 30% plus on this ETF SLVR. I can't own individual names because of compliance for my wife, so I go to the ETFs. What I'm doing is I buy 10% positions, and then when they grow to 13, 14, 15%, I pull them back down to 10. I've already done that with SIL. I'll show that pretty soon, but that's what I'm doing with the silver miners. I was concerned, frankly, about a month ago that the miners were not hitting new highs while the spot price was. That's all been resolved. Virtually all of the miners are hitting new highs, and I'm getting a lot of questions about, okay, how do I do this? This is what I'm doing. I'm not saying it's right. So whatever, and you pick your percentage. As things go up, you peel them back to the percentage level of your portfolio. You're comfortable. I would not buy this right here. I'd like to buy it at this 53 breakout, okay, in the case of silver. But again, 45 years versus 2 months, this is going to go on for a while. It just is. And listen, there's no guarantees, but I've been bullish on silver for, I don't know, 8 months, whatever, at least. And I think this continues. I've got another name.
So, Biggs, what got you in it? what got you in it to start? Like, what was the impetus
because
for
because
you initiating a position?
I need hobbies, okay, outside of playing bad guitar and bad golf, and I go through every ETF that's out there every single month, and I don't care if it's pork bellies, lithium, Albanian futures. I don't care. I just
Or
want to see
Victoria's
what's
Secret?
going on. Sorry.
I said, or Victoria's
Yeah,
Secret.
okay, yeah, Victoria's Secret, okay, and so stocks move in groups, and when the group starts to perk up, especially when it's confirmed by volume, I say, I'm going to put on my Warby Parker glasses, and as I'm walking around, I'm gonna say, hey, what's the bull case for silver? What's the bear case for silver? And then I kind of sit there and say, which one of these things, what are these points that I think have more bearing and validity than the others? And off I go. But I mean, to me, you know, I keep thinking everybody sees what I see, but after the '87 crash, I just started. I said the fundamental guys were getting their heads kicked in. The chartists made money. I'm going to kind of lean toward the chartist, and so that's what I do. And then you can go into all kinds of fundamental work, but the bottom line is silver's it's time, and I'm not going to sell too soon, but I am going to sell. That brings me to this. Okay, silver SIL was the first one I bought. This is back in June on this breakout here. Okay, and I literally had to go to my statement to go look for it. This is doing nothing, and then off it goes. Okay, I'm up 78% up to here. I've already had it do what I mentioned before was with SLVR silver, get to 13-15% of the portfolio. I pare it back. And when this gets to a double, and obviously less than a year, it's been 7 months. When it gets to be a double, I'm going to sell half. And I hope I'm wrong, and I hope I lament every sale I make. But I've just been doing this long enough that I know that you have to, this is silver's 20% of my portfolio.
Book some wins. Book some wins.
Pardon me?
I said book some wins along the way.
Yeah, it just, and I've got all kinds of issues, and you guys have probably figured that out by now. But I have sort of a OCD. I have a system in place that I've developed, so I try to be as dispassionate as I possibly can. And I'm going to go back, frankly, to AI and put in my prior assumptions given my history and say, hey, maybe the 50-day isn't the right one. Maybe it's the 37-day moving average. Maybe it isn't a breakout on 150% of volume. Maybe it's 130. And I'm going to fine tune this as we go. But it's worked for me for a lot of years. I don't lose a lot of money ever because I refuse to. And I try to find big trends and ride them. And I'm riding silver. I am riding silver. Let me do this real quick for Charlie, okay? Who is not just a bank analyst, he's one of our colleagues if you're new to the show, and not just a pretty face. The AG he asked about, it's the same thing. If you have a double in it, I would pull half off, and then I would let it ride. And you pick the percentage of the portfolio that you want to own, and you keep, as it rises, you keep pulling it back. But why in the world would you say, not Charlie, but anyone say, I know what the market, value of silver should be in my 37 tab model, and I'm going to truncate that by selling it before, this hasn't even hit its all-time high, and the spot price of silver has. So I'm a big, take half off if you double, and then let it ride. Cut your losses, let your winners run, and
That's First Majestic.
That's First Majestic AG, and Charlie asked about it specifically.
Got it. Okay.
Who, by the way, I had dinner with here in Boston. He's one of the smartest guys I've ever met. He's phenomenal.
Yeah, no,
I like him more every day.
Big brain.
Yeah.
All right, guys, you want to wrap it up there? We good?
Yeah,
Let's wrap it.
no,
I
let's
gotta
go.
hop. It's Friday, man. It's Christmas. We got
Yeah, it's
shopping.
Friday, and we've been doing this for 40 minutes, so let's get on with it. Thanks for
Who's
joining
giving
us
them their
on Wall
money's
Street
worth?
Beats, everybody. Thank you, Mr. Baker. Thank you, Mr. Mackey. We will see you guys on Monday. Follow us on wallstreetbeats.com and on passes/Wall Street Beats.
Take care, guys. Thanks.
Have a great weekend. Thanks, Jen.
Thank you, Jen.